Here to show us you about market updates. The Late Shore was forced to enter the U.S. stock, technology stocks, and somewhere around first, Bank of America said microscience net bubble again. The best days for tech stocks may be over, with outflows at 10-week high. Bank of America warns the possibility of stocks falling more than the gains this summer, and the S&P 500 could fall 300 points by September. Faced with spectacular gains in technology stocks in the first half of the year, those who wait and see finally ended. Before them, however, the best days for tech stocks may be over. A measure of investors' equity exposure jumped to its highest level since April 2022, as fears of Fed rate hike and recession fears ended the S&P 500's longest winning streak since 2021, falling 1.4% on Tuesday. On Thursday, separately, the Nasdaq 100 fell 1.3%. In the face of a dismal week, Bank of America warned Thursday that a small bubble of 24 years ago was more likely than rising stocks this summer. The stock market rose endlessly, and more fund managers entered the market. And Nathan Thorpe, the Boston head of global asset allocation at Manulife Asset Management, said time is running out, but participation in the stock market is near term. Over the past 3 months, he has been increasing his exposure to tech stocks, but he said post-cycle investment are notoriously prone to this dilemma of how to defend against market trading when the market performs better than expected. The S&P 500, the Nasdaq 100 is up nearly 40% this year, fueling fund managers who have missed out and have blamed by clients. In response, Fahad Kamal, Chief Investment Officer of Small Bank SG Kleinwort Campbell's Bank, said, as the market rose, more fund managers are in fear of being fired. Stocks snowballed, and more investors poured into the stock market, which Kamal considered a sign of his durability. He said, the factors contributing to this rally have shifted. A lot of people are watching and holding lots of cash. Ironically, their entry into the market could provide more momentum for the rally to continue. Fall this week before retail investors embrace the stock market. Retail investors bought $4.4 billion in shares in the week ended Tuesday, 2 standard deviation above the 12-month average, according to the public exchange data compiled by JP Morgan Chase. Long-term market sentiment deteriorated. The stock market outflow hits a 10-week high, and the Bank of America warned of a baby bubble. So far, at least, the market sentiment is positive. Goldman's index, which tracks stock market sentiment, rose this month to its highest level since April 2021. An HSBC survey of the world's 60 largest asset managers showed short-term sentiment soaring, but long-term sentiment has worsened. Technology stocks attracted $19 billion in the first 2 months, helped by high sentiment, Bank of America strategist Michael Hartnett said Thursday, citing the data from research firm EPFR Global. But at the time, EPFR Global data reality, and then some investors fled first. Tech stocks outflow reached $2 billion in the week ended Wednesday, the highest level in the past 10 weeks. Hartnett pointed out that this similar situation had it in 1999, during the dot-com bubble, when the stock market rebounded to form a baby bubble, the micro bubble. Hartnett said U.S. stocks were more likely to fall this summer than to rise. His team expects the S&P 500 to rise as much as 100 to 150 basis points before Labor Day in September, down as much as 300 points. By the end of trading day, the S&P 500 was down 0.77% and up 13.71% this year at 4,348.33. Markets have already adjusted in expectations of further Fed rate hikes this year. At the same time, the gloomy outlook for the recession has also weighed on the U.S. stocks. Hartnett has correctly predicted the decline in 2022, but his pessimistic forecast for U.S. stocks this year is not accurate. Similarly, Chris Harvey, head of equity strategies at Wells Fargo Securities, said this week that the market is similar to the tech boom in 1999 and 2000, which did not end until monetary policy tightened. JP Morgan's Marco Kolanovics also said U.S. stocks will be volatile in the second half of the year as the Fed's aggressive tightening lag out. Hartnett said investors were stock growth in stock growth stocks such as tech stocks because banks and commercial properties are still likely to suffer a severe recession, especially as the Fed raises interest rates again. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.